Hey everybody, happy Sunday and welcome to episode 8 of the Stock Trading Pit season 4. Today we have 4 segments as always, with segment 1 being Talking with Traders with Dan and our guest Anthony Crudele. Segment 2 is going to be the broad market review, going over some broad market ETFs, some metals, and some crypto. Segment 3 is going to be the watch list with our guest Eric Thies, going over mostly crypto charts and how he looks at the crypto market. And then segment 4 is going to be the weekend chart requests. So sit back, relax, and let's jump right into it.
Hey everybody, welcome to another episode of the Trading Pit, and this segment is called Talking with Traders, where we get to meet the people behind the trades. Today's special guest is Anthony Crudele. Anthony's a 22-year veteran of pit trader and a CME member, and he's the host of Futures Radio and a Developing Your Edge YouTube show. Anthony, thank you for being here today.
Thank you for having me, Dan.
Absolutely, it's a pleasure. So let's jump right in. A lot of people would love to know how you first got into trading. How'd you get your start?
I'll take a long story and make it a little short for you. So how I got started in trading was coming out of high school. I got into a car accident, head-on collision, and broke my femur, compound fracture. In the hospital for, a good period of time, coming out, really clueless as to what I was going to do in life at that point in time. I was 18 years old and was thinking about maybe going to Florida. I love the warm weather. It's funny that I live here now, actually, but was thinking about doing that and just sitting back in my bed, as I was waiting to heal. I remember the doctor saying to me, look, you've got 2 or 3 more surgeries before you really do anything. So maybe you want to start strengthening your leg. And I was kind of getting tired of sitting at home after, the recovery and the rehab, however many months that was. So I picked up the paper. I know actually, we had newspapers back then. I went to the classified and I took a job as a runner at the Chicago Mercantile Exchange. I started for Lynn Waldock. And why did I choose this job? Well, doctor says I should be strengthening my leg. In the back of my mind, I'm thinking to myself, I'm going to be in the business world, or I'm going to work in Florida or something like that. And the travel industry is kind of what I was thinking. You're 18 years old at that point in time. You're thinking to yourself, you just want to have fun. So I never went to college or anything. Started on the floor when I was 18 years old. And from there, really kind of the rest is history, I guess. I ended up becoming a member of the Chicago Mercantile Exchange when I was 21 years old. I went through membership when I was towards the end of my almost 21 birthday, because you had to be 21 at the time. So at the time, I was one of the youngest people to become a member. And that was it. Started in the S&P pit, was not really a very successful pit trader. And I moved to the screen, the E-mini S&P. I think most people know what that product is. That was just getting its start in the 90s. And so I went to the screens, and like I said, it's kind of the rest is history.
That's awesome. Tell me about your trading style. Are you a swing trader? Do you position trade? Do you ever day trade?
For the first 15 years of my career was pretty much only scalping and day trading.
Okay.
Coming from the pit at that time, I want to say really even right when the E-mini S&P first started, I was pretty much a market maker on there. There was not a lot of volume at the time. So I was, basically making bid and offers all day long in the E-mini S&P. And so I just stayed with that style for a long period of time until really the computers just got the best of me. Scalping to me was just, I was not feeling the reward. I think it was not only the P&L, but just my body. It beat me up. So I did that for a lot of years. And that's how I made really the vast majority of the money during that time in my career. And then over the past 6 to 7 years, I have moved more into intraday swing trading of futures.
Okay.
I trade a lot of crypto now, and that stuff I don't really trade intraday too often. That's pretty much all swing. So depending on the market, like a busy day today is a day where I would do some scalping. I didn't, but busy markets, I'll trade intraday. But majority of where I focus my energy now is short to medium term swing trading.
Okay. Do you use any indicators? Or are you a pure price action guy? What's your style?
I like Bollinger Bands. I use 20 period 3 standard deviation. I like just simple moving averages to gauge trend. So I like the 10-day moving average. And even, for a day like today, when we get a little busy, I look at the 20-day moving average just to see where we are. Because my time frame is shorter to medium term, intraday swing trading. I like to look at the shorter term moving averages.
Okay.
Don't pay much attention to the longer term ones. And that's really it. I don't use any other indicators. I created an indicator that I use on the Bollinger Bands. And it's just basically I take the top peak of the Bollinger Band and the bottom peak of the Bollinger Band. And at the time, I drew a Fibonacci retracement from the peaks. So instead of drawing fibs on price action, I was drawing it on the peaks of the Bollinger Bands. And I use those levels as support and resistance.
That's fascinating. How'd you come up with that?
Really because my biggest weakness was fading moves.
Okay.
And it derived from knowing my weakness and saying, what can I do to stop this? So I started to look at Bollinger Bands, and I recognized when the mouth is open and the market's going up, hugging them, and that mouth is staying open, and the top is going up and the bottom's going down. Every time I tried to get short, like I said, I was an intraday scalper, short-term trader. I just keep getting chopped up, and that trend would keep going. When the Bollinger Bands finally started to revert back in, I looked at it and said, well, now volatility is kind of boxed in. At the time I was learning about fibs, I said, maybe I draw a fib on that. And if it stays below one of these levels, then maybe it goes to the next level. So instead of looking just at the price action, I needed to find something to keep me out of my worst trades, which was going against these trends. And then look at these days. I mean, these markets go so much further than you think.
Mm-hmm.
And I don't fade a trend until the Bollinger Bands come in. And was the original thought process. And a lot more came after that, but that was how the idea was generated.
That's interesting. I think that's one thing that a lot of traders don't do enough of is experiment, right?
Yeah.
Try new things and try new ways to look at things, because everybody's basically looking at the same moving averages and the same fibs and the same levels all the time. That's fascinating. Are there, Anthony, are there any sectors or names that you have your eye on right now? I know you mentioned you mostly trade futures and crypto, but is there anything that's kind of piquing your interest?
Right now, what's piquing my interest after the sell-off is I want to see what the Russell does in the coming days and the S&P. Those are areas I'm looking to potentially look for intraday to multi-day long scenarios. I think that the primary trend is still up. So one of my favorite trades is a really quick move back, mean reversion move, that we get to some levels where the Bollinger Bands stay closed and maybe we run some stops. To me, that's one of my favorite trades. So I'm looking at that. And I'm actually long gold right now. So that's another area I like right now. I think with rates going down like we saw today, I think that supports it. I wouldn't say that gold is a hedge against inflation that everyone talks about right now. I wouldn't say that gold is a hedge against the stock market. I think you trade gold for what it is. But I like gold because of going back to the Bollinger Bands. We had this move higher. We had a big break. The Bollinger Bands had these big moves where they got bigger and wider than the previous move higher. Mm-hmm. And so it tells me that volatility is there. And I think gold is just in this, rangy trade. So I've been long gold. I scaled out of some the other day. I got stopped out of some today, got back below the 10-day moving average. So I like gold long, and I'm really only trade. I should also say I really only trade long a lot of stuff right now. I mean, I might look at shorts, but in stock market, not too often, not anymore.
Makes sense. When you do go short, do you use common or do you use options?
Oh, I just get short. I just using the futures. I use options sometimes, but most of the time just outright futures.
Okay. You mentioned you don't think gold is a good inflation hedge. What do you think of Bitcoin as an inflation hedge?
Well, I mean, for a period of time, it looked like it was the new hedge against inflation, and that's since changed. I mean, it's like one of those things where things work in this industry until they don't. I mean, we could always look at what's happening in a market and pair it to a macro theme and say, look, this is what's working. I mean, I'm guilty of that myself. I think we all are. We're always looking for answers, but I don't see it. I mean, not anymore. I mean, I think that a lot of these markets nowadays, which I think is different from the older days. I mean, I would say even just 10 years ago or longer, or maybe even 5. Everything now that I look at it individually. I used to look at things a lot more as a whole. But I think a lot of markets these days, I look more on an individual basis, especially futures and crypto.
It makes a lot of sense. Yeah. I thought it was like the most popular thing you would hear right, is Bitcoin is the new inflation hedge, and everybody was piling into it, right? It couldn't stay that way forever.
Yeah. I mean, and what happens is it's just like with any other trade. I mean, it gets loaded up in that type of thinking and just FOMO,
Yep.
whatever you want to call it. And for a period of time, I mean, you look at what Michael Saylor was talking about. I mean, the guy's got a huge following, and it's like, I'm not even sure where he's long, he's still even in the money. I mean, so now you've got so many people overextended in the Bitcoin trade. I don't really trade Bitcoin. I trade Ethereum and I trade a bunch of other cryptos. But, once again, it's just, if we've learned this time and time again, right? And when these trades get crowded, it doesn't matter what the macro theme is. It doesn't matter what it is. It comes down to buyers and sellers.
Yeah, I totally agree. What do you, so on kind of a similar topic, the S&P has been a little wild lately. What do you think of its current price action?
One thing I look at is when the Bollinger Bands, I go back to, because I think it's the easiest thing to talk about when you can see visually. I mean, I'm visual in my trading. I know a lot of the viewers are.
Mm-hmm.
When I start to see daily Bollinger Bands peaks just keep getting chipped away and taken out, it just really always concerns me that we're just getting to each and every new level without any sort of exploring any of the lows. So I think that one thing I've looked at over, several years now, I would say, is that bear markets are super fast now. I mean, they're like 2 days. I mean, yeah. I might be exaggerating that, but I mean, they're really short. I mean, you look at last year in 2020. So I look at it and go, with these markets, this is a big reason why I don't really trade short anymore, because like after today, it's like, okay, now I could have told you for weeks that we keep chipping away at these higher Bollinger Bands. And eventually I said to myself, I still was bullish, and the little bit of trading I was doing was long, but I said at some point this could happen, and it happens all at once. I mean, just like today.
Yeah.
So when I think about the current price action, it's one of those things where I think it's going to be fast to the downside, like we already saw, potentially more. But once it's done, it's grind back up. So I look at the price action and say, what have we learned? The bear markets or the corrections or whatever you want to call it are so fast that I don't even try to catch them anymore. I wait for them to run their course, hit some support. My Bollinger Bands start to come back in. I find an area, and I go back to executing it. Right now, it's difficult. I mean, I can't be short and I can't be long here because we don't know when it will end. Just like on the way up, I didn't know when it was going to turn bearish. And all these people I see are saying, well, I could have told you things were lining up that way. Yeah, well, I could have told you that too, but I can't execute it. It's just too difficult, So I think I'm just waiting.
And things line up for a long time, right?
Way longer than you think.
A lot of people look at divergences, right? And those things can last for months or even years.
This is why I don't use divergences really that much anymore. And I use them for confirmation on retests of highs or lows. So especially, I think that bull market technicals just work so much better because especially in this type of tape that we've seen over the years. So I'll see a low maybe be made, maybe a retest of the low. That I like for a divergence. I don't really like it for rallies because they just, for me, they just don't seem to work as well.
That makes a lot of sense. A lot of traders don't do enough of that, just self-discovery where they realize what works best for them and what doesn't and keep track of it. I think it's one of the things that sets people who are successful apart from those who aren't, is that discipline to learn from your own mistakes.
Think outside the box, it's just like, think outside the box. You have to, we always talk about, at least on my show and a lot of my trader friends and in the FinTwit community, environment matters. And you got to look to see what themes are. I mean, goes back to the S&P, the NASDAQ, Russell, things all unravel in a couple of days. It's what we've seen. It happens quick. And so just identify that, just keep watching things and learning things and get better at your execution.
Absolutely. You mentioned your show, so maybe it's a good chance. Can you tell us a little bit about, the Futures Radio and the Edge YouTube show that you host?
Yeah, Futures Radio show. I just started doing live every week now. So on Wednesdays, I'm going to be live every week, sometimes even Thursdays if I can't make a Wednesday. And it's just really about engaging with traders in the derivatives and crypto industry, even the stock industry. I talk a lot about process. I'm a big believer that in order to really get better at this business, you have to hear how other people are trading and what it is that they're doing in their process,
Agreed.
similar to a lot of the shows that you do. And then you need to build something off of that. So I talk a lot about that on the show. I'll also talk about, macro. It's a combination of a lot of things. Futures industry, I really just cover it in its entirety. And I'll do 1 to 2 shows per week. And like I said, we're now have one that's live. And then Develop Your Edges. I started Develop Your Edge because I thought about myself each and every week and said, you know what? Every week I'm working on my edge. What am I doing? So I said to myself, create a 10-minute video, quick, tell people what you're doing to work on your edge. Because people, I would say the most common question I get asked, and a lot of my guests that people want me to ask my guests is, what is their edge? What separates you from another trader? And I wish it was just something that was just that easy. I'll always say it's myself and my execution, my commitment to getting better. But I'm constantly developing it and working on it, because to me, you don't just create an edge in trading and it works forever. You're constantly working to develop it. So that's why I do that show.
Absolutely. A marathon, not a race, right?
Totally.
So, Anthony, we're running a little bit low on time, so I'm going to have to jump to my last question, but it's the one that I think a lot of people are here for. What advice would you give someone brand new to trading? Someone who just wants to get into this for the first time?
Think longer term and your shorter term results will be better. I think that most traders fail at trading at the beginning because expectations are skewed. I know that because that's what I did. I came into the business with high expectations and my dreams were shattered pretty early, right? And I go from having money in an account to being broke multiple times, having to work while I was trading. And I would also say have an income while you're trading. And if you think long-term and you are putting the time in and the commitment to learning and you're challenging yourself along the way to get better, you need to be able to have that flexibility of having some income. I know so many people that think that they're just going to come in, or if they've seen themselves make some money, that they could just right away pull that away and be able to go in there and just do this full time. I know the pressure it's put on me and my family over the years, learning how to do this until you finally get to that point where you're doing well enough, you have enough saved. It's hard to not have some income. And I just keep going back to put the time in. Know that it's a long journey. At the top of my Twitter page, it says trading is a journey of oneself. And if you think about that and you embrace that, I think you'll get there a lot quicker.
That's awesome. Last question. I know I said that was the last one, but I want to ask you one more. What would you say the biggest mistakes new traders make are?
I would say thinking about expectations and time horizon as well, and thinking that it's just finding an edge or finding something that works and then it will work right away and for a period and forever. I think the number one thing is really expectations, because that sets up all of the other failures that follow it. If you come in to expect to make money and you do make money, all of a sudden your mind is wrapped around that idea. I remember the first time I bought a fib retracement and I waited for it and it worked. I said, that's all I'm going to do is do this. And next thing you know, I'm blowing out accounts, or this works now. I'm just going to trade uptrends, or I'm going to trade this. And I kept looking for that short-term fix to get to the point where it just worked forever. And I didn't think long-term. I thought short-term, and I wasn't lazy. I was still putting time in, but the mistake was too high expectations, too short of a time frame to where I was going to become successful. And when I slowed things down, thought longer term, and changed my expectations and started being forced to have to work while I was trading, things opened up for me.
That's great advice. Thank you very much for sharing. Everybody, thank you for being here for the interview. Anthony, thank you for coming on. I hope you'll come on one more time in the future sometime.
Anytime for you guys. Love the work that you guys do. I appreciate, like I said, all the work that you guys do. And thank you so much for having me on the show.
Yeah, thank you again.
Alrighty, let's look at the broad markets first, and then we'll look at some metals, and then we'll look at a couple crypto names. Starting with SPY, as always. I mean, just a absolutely crazy week here. I mean, the move this thing made after the Monday gap down is just kind of mind blowing, to be honest. So let's kind of look at the logic behind this. If we anchor a volume by price from the May low, we bounced exactly where kind of the textbook would tell us to bounce, right at this volume shelf below. This is break even. demand. This is where shares got back to break even, supply dries up, and then that's where you get at least that short-term bounce. And then obviously this type of move, you needed some demand. So a mix of just supply drying up near the volume shelf and then just a huge uptick in demand into the last 4 days of the week. And you can see that we hit all-time highs on Friday, but you can also see here that we had this volume gap. And so we didn't have a ton of liquidity above. And notice this candle right here, just this huge candle kind of reflected that. Notice how we literally moved right up to this next volume shelf and stopped there. Took a day to get through the break-even supply, and then we kind of took off again since there wasn't a lot of volume above. So all in all, new all-time highs. The area to watch above would be simply just this diagonal resistance above, right around, let's say, 442. And then if you look at the weekly side of things, you can see here that we are starting to, once again, grind up along this longer-term resistance. The longer-term resistance, if we did wick to wick, would be up here around 452 or so. Now, if we were looking at more or less this dashed line here, which kind of takes into account a few more candles that didn't get all the way up to this solid line, that would put us right around, let's say, 444 to 445 above. So let's see what happens. But all in all, a very strong candle, huge bullish engulfing candle, even an outside bar for the week. And you can see here that the month of July is coming to an end pretty quickly. So we can start to look at the seasonality into the month of August. You'll see here that August still has an 80% win rate, very strong month over the last 5 years. And so we'll have to see if that continues to play out. A lot of people think of, August as a kind of a volatile month, and it actually is, which you can see by an uptick in seasonality on the VIX. But you can see that SPY does pretty well during this time too. Now, the Qs, same thing. I mean, just insane the type of move we had across the board. So you can see here, same thing. We pulled back right to this next volume shelf below. And you can see here that we moved pretty quickly through that volume gap on Tuesday. Took a couple days to get through the supply zone, and then we moved up very quickly because there was really no supply above to kind of get through. So once we got through this volume shelf here around 363, it was clear sailing into Friday. So a really strong move. And then on the weekly candle, we were talking about this 1.618 extension and getting rejected right at it last week. We did have that pullback, but then just an absolute huge move here. You can see we broke through the 1.618 extension. You can see once again here we have this outside bar and this engulfing candle, obviously, and with this being an outside bar as well. And so I have an alert set on the 2.618 extension above using the dynamic alerts on TrendSpider. Added quite a bit of sensitivity here, just in case we do move up pretty quickly over the next few weeks. But don't get exactly to that 2.618. That's why we have that sensitivity, that purple area around the 2.618 actual line. Same thing for August here, 80% win rate. So going into the next month, still very strong, historically speaking, for the markets. And then once we go into September, October, that's when things drop off a little bit. And remember, seasonality isn't an end-all be-all. Just because there's an 80% win rate for August doesn't mean we have to close green, but it definitely shows that if the technical setup is there and we have a strong month coming, those are two variables to really keep in mind. Now, on IWM, something very simple here on the daily, we're still stuck in this range. There was a ton of trend lines that broke down, all of that craziness. But at the end of the day, we're still in this range. We did not break down through these previous lows back in February. And so we're literally just chopping around within this essentially just rectangle at this point. So on the weekly side of things, we talked about this symmetrical triangle breaking down. We moved right down to that anchored VWAP from this breakout point in November of 2020. You can see that we did undercut it a little bit, but a pretty strong candle here on the weekly, and possibly setting up for at least a retest of that previous support, which would possibly be resistance moving into the weeks ahead around, let's say, 225 to 227. Going into August, you can see here that August doesn't have as strong as a win rate as the Qs and SPY did, with only a 60% win rate compared to the 80% that we had on the previous two, but still pretty strong. Definitely, not the weakest by any stretch of the imagination. So we'll just have to see how this plays out going into the next month. So that's IWM. If we look at VIX next, I mentioned here, VIX, if I'm not mistaken, VIX has some pretty solid seasonality into August. So yeah, you can see here, August has a 100% win rate over the last 5 years, which is really interesting to see that the VIX has a very strong month, but SPY also has an 80% win rate. So maybe we're just going to have some volatility in August. That's pretty common, honestly. But one thing I'll mention here on the daily chart, just looking back, we're still pretty far back from where we bottomed out before the COVID spike. We were trading, or the VIX was just, its levels were literally at around 12 to 13 bucks for quite some time. So, 17.2 is still a pretty elevated level. If you look back in the last, 5 to 6 years, this was still not a very low VIX. A low VIX is in the 11s and the 10s sometimes. So that's something to keep in mind. Do we fall back down here to these previous COVID levels or previous levels before COVID? We'll just have to see. Now, as I mentioned, definitely keep the seasonality in mind. However, June was a very strong month for the broad markets. And, June didn't really necessarily, just because it had a strong win rate didn't mean that the markets crashed. I mean, it was a very strong month. So just keep that in mind, that the seasonality, especially on VIX, could just signal maybe some volatility, but not necessarily that the markets are going to close red. So we'll just have to see how that plays out. Let's go into some metals now. GLD is the first one. GLD has an interesting setup here. If we kind of zoom in quite a bit, you can see on this very short-term chart here, looking back really since mid-June, we do have a little bit of a bull flag here. We'll have to see if it actually plays out. Metals have literally just been dead. I don't really know a better word to describe it. They just have not moved at all. A lot of people thought they would. I think there's a lot of people trapped in these metals trades right now because everyone was saying, oh, inflation's flying, have to go up with it. That just has not been the case at all. So still within the symmetrical triangle. The best way to play this on TrendSpider, just set an alert on the support and resistance line and then play the price action. If the price breaks to the upside, then obviously we're breaking out. If we break to the downside, then we're breaking down. But a lot of people playing, trying to play this pinball action between the two resistance and support lines, a lot of the time can definitely give you some false signals there. So a lot of the time, if you're just trading price action, you're going to wait until this actually breaks out before you take a trade. So that's what the alerts are there for. So you don't have to stare at the chart. Once you get an alert, you know that the price is either broken to the upside or the downside. It's time to get back in front of the chart. Now, what's interesting here is July is actually one of the strongest months of the year. So looking back on, if we went to the monthly chart, you can see that we are green for now for the month of July. So that is kind of right in line with this seasonality. But you'll see that the seasonality actually drops in half going into August with only a 40% win rate. Then going into September, only a 20% win rate. So the next 2 months definitely have a decrease in seasonality. And I think the main thing to focus on here is which way does the price go? Does it break down? Does it break out? And that may give us some clues going into August with the seasonality complementing that information as well. You always want to use multiple variables. You just don't want to go in and say, all right, well, July has a 100% win rate. I'm going to go very heavy because that win rate is 100% and it can't be wrong. Of course it can be wrong. That's looking at historical data. It's not telling you what's going to happen in the future. So just keep that in mind. Seasonality is a great tool, but you have to use it responsibly. Going into SLV, SLV is one that's already kind of broke down. So that's something to keep in mind. Is SLV kind of showing us maybe the future for GLD? You can see here that we were watching this area last weekend. You can see that we did break through to the downside. I had an alert here, it triggered. And then on the weekly, the daily side of things, you'll see here that we do have both of these gaps above shown by the automated gap detection on TrendSpider. The gap snake is what we call it. You can find that in the indicators list. But yeah, not the strongest close here. I mean, you do have a little bit of a wick on the weekly candle, but still not what I would call the strongest close by any means, especially below this trend line. July has an 80% win rate. We're definitely not seeing that at least play out as far as price action goes this year. And so this would probably close red unless we have some huge move to the upside. But as I mentioned, it seems like these metal trades are just a crowded trade right now. There are so many people so passionate that, oh, metals are going to go to new all-time highs. There's no way they can go down because inflation's going up. And, this is proven that that can happen. So if we did move to the upside, definitely this gap above. Remember, you can create alerts on these gaps. So you can get an alert whenever the gap starts to fill, or you can put an alert at the top to know when it's fully filled. So that's something that you can use on the platform using the automated gap detection with the alerts. Now, going into some crypto here, crypto actually not the worst week. A couple things to keep in mind here. One is we still have this descending triangle here. So I did have a couple questions when I posted a chart like this. What makes this a valid trend line? It's only 1 point. And that's completely correct. This is more of a line of best fit on the bottom here. You can see that we've got these wicks. This is more of a support zone. And that's what I've kind of created here. I'm just kind of a little OCD about this. I would have this shaded area here, but it just drives me crazy to have this little extra part here. So I just have these two areas highlighted in green. I don't have a box, but generally I'd have a highlighted green box there to show this is a zone rather than just two trend lines. It's more of a line of best fit. Now, the bull case here is if we break out or continue to break out here, the all-time high anchored VWAP above would be around 38K. The bear case would be a breakdown, continued to move towards this COVID low, this anchored VWAP from March 2020, which is right around 26.7 to 27K. You always have to give a little margin of error with anything, but especially with crypto. So all in all, one thing to keep in mind here, going into August, we only have a 20% win rate over the last 5 years. So keep that in mind, but also keep in mind that, possibly the weekly candle setting up a little better than what it's looked like over the last several weeks. But Bitcoin is one of those things, or crypto in general, it can change so quickly. We got that little pump because Elon Musk said that they're going to accept Bitcoin again, or may accept Bitcoin, whatever. It's clear that he's moving the market here and pretty much has kind of a hold on the market, which is a little scary, but we'll have to see what happens. Now, one thing to keep in mind, anytime you have a breakout like this through resistance, you want to turn on the raindrop to see what's going on within that candle. So in this case, if we zoom in, you can see that there's actually a decent amount of volume above that resistance point when we did break out. Now, something to also consider is the divergence side of this, where if you look, I'll go back to it in a second, but today is actually a green day. It's a hollow candle showing that we have a close, if we closed right now, higher than the previous day. But the raindrop is actually showing a red candle here. So anytime you have a discrepancy where you're closing green, but you've got a red raindrop, or you're closing red, but you have a green raindrop, it's just at least something to consider. The logical place below that this would test would be this previous resistance, now possibly acting as support. We'll have to see. That would be around 31K or so. So let's just see what happens with the weekly candle here. There's still a lot of time left. As you guys know, we do these recordings after the market closes on Friday. So we'll just have to see, on Sunday, how this weekly candle looks at that point. But at this point, you are starting to form maybe a little bit of a hammer here. But the seasonality is worth noting, with August being one of the weakest months of the year. Going into Ethereum now, kind of the same thing, actually a little bit of a stronger candle here. The one thing I'd mention, we have 1, 2, 3, 4 times we've tested this bottom here, and I'm not really a believer in triple tops, triple bottoms, quadruple tops. You're generally going to get a resolution to the upside or the downside. And so in this case, anytime you get this many touches, I would assume maybe you get a continuation down. But that's, my opinion doesn't matter. It's what price action does, and we have to go and take that into account. So one thing on the bullish side of things is, one, from this breakout candle here from November of 2020, kind of breaking out and closing right above this ascending triangle resistance, you can see here that we did undercut this longer term trend line. This is something that we've had on the chart for quite some time. You can see that we undercut actually the anchored VWAP as well. I'm sure that triggered some stop losses, but we actually had a decent move to the upside. I thought for sure we were going to continue down. I was wrong. I'm always happy to say, that I'm wrong about something, because at the end of the day, no one knows what's going to happen. We can only take into account what is happening and go from there. So I was definitely wrong. I thought this would continue down. We got a nice bounce right around 1700. I think when someone that follows me said, hey, I don't think I agree with this. I think 1700 is a low. They pretty much nailed that to a T. So congrats to whoever said that. And we'll just have to see what happens from here. But all in all, a decent candle for now. But the fact that we did have this wick below the support line is something to consider going into August. But you can see that August has a 40% win rate, so not a ton of edge there. It's not a big number like 80% or 20%. 40% is kind of right in the middle, obviously. So we'll have to see what happens. But all in all, that is the broad market update. Hopefully this was helpful in understanding a little more about how you can use some of these different features on TrendSpider. We touched on quite a few, and how you can use these to look at the broad markets, some metals, and some crypto. Let's move on to the next segment. All righty, let's jump right into this watch list segment with special guest Eric Thies. And today we're going to be going over some crypto charts that he's looking at. Eric really focuses on the crypto side of things. So Eric, thank you for being a guest. We're really excited to have you. And what are you kind of seeing on the crypto side right now?
Yeah, absolutely. And thanks for having me, by the way. It's good to be here and good to catch up with you. With everything going on in the crypto markets right now, it really is looking at a bigger macro view of the market and how it's doing, different parts of what's going on in it. What we saw basically going on towards the end of Q2 and even really throughout Q2 was more of a blow off the top kind of setup with the market. And while it wasn't as great as we wanted it to be for almost every chart, I'm going to zoom right out here on Bitcoin itself and really kind of show you what was going on from March 2020 through March 2021, where we saw, prices go from $3,000 of Bitcoin after the crash on March 10th, all the way up to 65, almost 60, just over $65,000 here later on in the early 2021. While it doesn't look like it's as good of a climb as we would have expected from 2017, some would argue there's going to be some more coming in Q4. I saw a chart yesterday on a 12-month time frame that showed a terrible kind of shooting star looking candle that we've got right now. And the market's tough, right? And it's clearly in downtrend. And with that, aside from Bitcoin, there's only so many charts that I could recommend, trading right now for day trading, swing trading. And then if you're scalping really, because the macro trend's less relevant there. So the first one being Bitcoin itself. Like I was saying, I default automatically to Bitcoin, usually on, any given exchange. Right now I've got on Coinbase Pro, but really wherever Bitcoin's going, I like to take that as what the rest of the ecosystem is doing in the total market cap overall. So if Bitcoin's going down like it is right now, down almost 65% since it's overall all-time high, it means the rest of the market's going to follow, and sometimes with a little bit more pain than Bitcoin had itself. So Bitcoin is definitely one I want to, I can walk through. And there's a few others as well. They all happen to be higher market cap value.
Love it. Well, so as far as Bitcoin goes, so kind of you look at Bitcoin, and then do you have like a set watch list that you go to from there, or is it just kind of what's trending on the, outside of the Bitcoin space, or how exactly does that work? Yeah,
absolutely. So, if I'll always look at Bitcoin first, and then I can basically assume if Bitcoin's plus like 6% here, you can kind of see the stronger trending ones are going to be above that, whereas like there's some that just follow along just because Bitcoin's doing it. For example, Ethereum up 8.6%, whereas if you go down, there's other, the Bitcoin pairs are, if those are also going up. Basically to answer your question, what I'll do is I'll look at the USD pairs, and if Bitcoin's going up a lot, the next step would be checking the Bitcoin altcoin versus Bitcoin pairs. And if those are going up even more, I know that there's a lot of volume going on in that part of the market. For example, Ethereum, 8% here. And then I don't think I have it on this wash. Oh, I do. It's another 2% here. So that's despite Bitcoin going up 2%, 6%, we still see 2 extra percent from the Ethereum pair. So now I know there's more volume in Ethereum. And what I'll do is I'll probably just zone in on either Ethereum BTC or Ethereum USD from there to get like kind of a short trade going if I wanted to get into a scalp.
Got it. Okay. And as far as kind of the time frames you're looking at, so you kind of mentioned, the macro view, and then kind of some of these shorter term time frames. What time frame are you generally kind of looking at, more of a confirmation of a bigger move to the upside or the downside? Because the 1 hour, the 2 hour candles can definitely be a little noisy. Is there a specific time frame that you look at that's a little more robust, that kind of cancels some of that noise and gives a better idea of the overall trend?
Yeah, absolutely. So I'll never go into a trade on a lower frame without knowing what the higher frame is, if that makes sense. So let's even with the macro, if I was trading the daily, I wouldn't go into a daily trade without knowing what the weekly says. Or if it's, in this case, if it's the 1 hour trade, if I want to trade the 1 hour, I'll go to the 4 hour here first. And I'll know that this is probably going to start, tanking down from here, because you have, a uptrend progression and then the shooting star here. And historically speaking, that usually leads to about 2 or 3 periods down. And on the 4 hour, that's only 3 candles. On on the 1 hour, it's 12 hours. So from there, I can kind of zoom in. And I know that most likely over the next 12 hours, we're going to see probably a retest of this, 1900 level down from that 1919 down from 1942 right now. So kind of zooming in from there. Now, if I wanted to do that same logic on something higher, like the daily, then I'll start on the weekly, and I'll see that this is actually an impressive kind of setup right here, where it's, this might be a time for the market to either, if it's not going to go straight down, I'll tell you that, go sideways a little bit or even go up from here. So what I'll do is I'll then look at the daily, zoom in, and see that, yep, that's basically what I'm seeing. A lot of buy support down here in the high 1700s for Ethereum. And I'll, draw that box there, and usually map out my ranges on the trade from there. And I don't want to clutter the chart up, but, there's indicators I'll add to it too. Bollinger Bands, really just get a sense for it based off of first starting with the time frames and then zooming in to the indicators, highlighting my ranges and going from there.
Got it. And so, Bitcoin, Ethereum, are you looking what are kind of your top 4? Are you just basing that on market cap, just the 4 biggest ones, or the 4 most popular ones, or kind of how do you choose what the names that you're looking at from more of a top level kind of larger market cap group?
Yeah, it's a great question. What I'll do is I'll usually, if I want to see how else the rest of the market's doing, maybe there's some small caps that are popping off, I go where the volume goes. So then if I zoom out of this watch list, here on TrendSpider, and I go towards, just any of the crypto ones, the top crypto pairs, and find the volume from there. I don't have it filtered on, but basically I want to filter by volume. See where it is, and occasionally I'll even come over here to Bittrex, or any of the exchanges that have volume on them. Binance even. I can't technically trade in Binance right now, quote unquote, but and I'll see where the volume's at. And then, if I see that the volume itself, this is price changing. I'm not logged in, so that kind of flopped. But when there's the volume and showing me the volume change, I can filter from there. And really just see in the past couple hours where the money in the market's going. And I'll just try it over on here on coin market cap, because this is just going to show me where all the money is. And it is a good thing to note too. Before I go into any trade, it's no joke. Tether is the highest volume right now. So a lot of people either going into Tether or coming at, it has the highest right now. So when I see that going on, I usually know that it's a time of volatility in the first place.
Got it. Okay. And as far as kind of what's looking decent right now, I know you were kind of looking at more of a top-down approach. So the weekly candle on Ethereum is looking decent. Do you kind of look at these timeframes before they close? Because some people, swear by, I'm not going to look at a time frame until it's closed. will you kind of look at a weekly or a monthly time frame before that time frame is actually done kind of forming, or do you wait until the candle's fully closed?
Well, I agree with it. You need it to be closed on when there's a lot of noise, right? So if I'm on the minute or anything below an hour or even below a day, you kind of want to, in terms of making large decisions that could, if you're going to go heavy on any kind of trade, I want to know that the period's closed but the lower the frame, the more noise there is. So something like that, it's going to look, you're going to want it to close, and you look at the one previous, because if this hadn't closed like that, I would have assumed this was going to be a downtrend continuation. That said, when you get to the higher frames, I can see why maybe towards the end of a week or towards the end of a month, you're going to be, at least highlighting mentally where a few of those key levels are and where it stands right now. Like this right, like notice the price right now is sitting right on top of, an uptrend bar from February. And so there's a lot of buy support on that line. So I would be surprised if it closed below. But if it did close below this, on Ethereum, if it closed below 819, let's call it 1900, then I'm going to know that it's probably going to fall down to 15. So if we get a monthly close, now it is later in the month, and it is very close to the point where I wouldn't want to judge a trade off of that assumption right now. I want to, because we're closer to the end of the month and it is this close to that line, I'm going to wait till the end of the month, occurs. And then I'll even, I just won't use the candlesticks all the time. I'll go into a line chart or any other kind of chart that shows the close. And I'm going to note that, it kind of held here above 1900. We're good. Or is it going to fall all the way to 1445?
Yeah, that's interesting. A lot of people don't really use the line chart, but it's a great kind of indicator and just overall view of trend. I started trading with a line chart. I didn't even know what a candle was until later down the road. So I'm right there with you on the line chart.
Yeah, it's something I do that, I don't do it here in TrendSpider, but let's say it's on here over on CoinMarketCap. This right here on the right under the last 7 days actually tells me a lot more than, in a lot faster amount of time than if I just went chart to chart, right? So I can kind of see that, like, Binance, of course, BUSD is going to be, it's a stable coin, so it's going to be pretty flat. But why wasn't it flat? It's going to tell me when the volatility was. And then I can also kind of gauge, this could be a market attempted of a local low or maybe a market low. And they all kind of have that shape. Notice any of the coins that aren't stable coins are going to have similar shape here. I feel like Doge is different right now, but so, that's just what I do. I'm visually a pattern kind of learner, pattern visual kind of guy. So, one thing I do love about using TrendSpider too is that I can actually find, and auto detect a lot of the patterns. And then also there's the scanner that I think is probably the most innovative thing on the market that no one knows about.
Thanks.
But
the scanner's nice for, looking at discrepancies on different exchanges, just looking at kind of those types of things. And, so it's definitely nice to be able to scan on the crypto side for some of those weird discrepancies in exchanges. Because a lot of people think, Bitcoin's price is this. Well, yeah, it's that price on that exchange, but there's a lot of other exchanges Bitcoin's
a lot of arbitrage going on, right?
Yeah, priced on. And so that's something that you can do for sure on the scanner. So we have a couple minutes left. Any words about any chain link or anything like that? Are they all kind of looking the same right now? Are there any ones that are looking relatively decent on longer term timeframes, or is it kind of this wait and see type of thing? It seems like Elon Musk possibly moved the market again, talking about that they may be accepting Bitcoin again in 2022. Do you like that aspect of the market where he can pretty much move it, or do you think that's kind of what's making the market on the crypto side a little toxic?
It's a tough question because my true, if my opinion was to matter, I think, the fact that Elon tweets about it, that brings volume and exposure to the market. So whether or not that's positive or negative exposure, I mean, there's no such thing as bad press, right? So price may drop, but that's more people that were involved and are getting exposure to the markets in general. That said, what you'll find, and what I've found over 4 or 5 years in these crypto markets, actually far longer than that, like 6 years now, the only people that will verbally and vocally complain about manipulation are the people that were negatively impacted by it. And so when you go online, you see all these people that were talking about, oh, Elon can tweet about how they sold their Bitcoin profit, and now Bitcoin dropped 30K in a month. Well, I know that for a fact they probably didn't sell the top then, or they probably held their Bitcoin through that, and then they're just pissed at themselves. That said, too, those same people were the ones who bought Doge at 0.0002 of a penny, and I don't hear them complaining about that manipulation.
Yeah.
So the fact that he can bring volume to it, that goes to show kind of what the power of volume is in the markets. I think, the all-time manipulation king is not, I mean, Elon might be number 2, but John, McAfee, or, rest in peace, 2017, the guy could tweet a call sign and it would literally pump and dump. And it was, so that said, I complained about that because that was manipulation. And look, I was on the losing side. That's, but that at the same time, these kinds of things, currency is so much different than stocks because it's so psychologically based, that because we're assigning it value, right? We agree it's $1 because it's $1. We agree Bitcoin's $29,000 because we agree it's $29,000. Now, if you get a lot of people with different opinions on that coming in, then it's going to bring volatility, which is like, stocks have insider trading that affects them far more than crypto has it too, I'm sure, but with like negative news and all that, whereas crypto has the social aspect of manipulation. People can be scared left and right. There's only so many safeguards that can go into that. If your life savings are in crypto, you're probably overexposed, and so manipulation is going to affect you negative. When it happens, it's going to be negative.
No, that makes a lot of sense. Well, that is all the time we have for today, going over some of the different crypto names, as well as how Eric kind of looks at the market from a different time frame approach. So Eric, thank you for coming on and discussing this, and really appreciate you being a guest, and looking forward to next time.
Absolutely. Thanks for having me, guys.
Alrighty, let's look at some weekend chart requests into the week ahead. And Tesla, definitely the most requested ticker so far when we did our request survey on our Twitter. So we'll go over Tesla first, and then jump into a couple other names, including some of these meme stocks that did have a little bit of a bounce this week. So Tesla, starting off with Tesla, this is pretty much the same chart that we looked at last week. You can see that, we did bounce right off this break-even demand zone below on Monday, moved up pretty quickly, didn't get all the way up to the break-even supply. And one thing that I will mention, that I mentioned in the broad market segment, was anytime you have a difference between the color of a candle versus the color of a raindrop, it's worth noting. So Tesla did close red on Friday, but you'll see here that we actually have a green raindrop. So there is a little bit of a divergence factor going into next week for Friday's close on the candle versus the raindrop. Let's just see what happens going into the week ahead. Now, the weekly chart definitely shows that we are going to get probably a pretty big move. I mean, this is a setup a lot of people are watching. The symmetrical triangle here, if we anchor the VWAP from the all-time high, you can see we've been rejected 1, 2, 3, 4 weeks in a row. We didn't get up to that anchored VWAP this time in the past week, but you can see we're right at the apex of that symmetrical triangle, and something is going to have to give either to the upside or the downside, and we'll just have to see what happens. So that is Tesla. Going into the next one, we have Fubo. This one's still a pretty commonly requested name, and it's definitely a ticker that has some pretty interesting price action a lot of the time. In this case, on the daily, if we're just looking at the raindrop chart, you'll see here that if we anchor the VWAP from the swing low, the price has respected this quite a bit over the last week and a half. You can see that we did undercut it a little bit, but not too much. And you can see here that if we did continue up into the week ahead, this break-even supply area above right around 29 would be your first area where the market would need to start digesting a little bit of that supply. What do I mean by that? I mean that if you got in at 29, you just dealt with a drawdown to 24.50, you get back to break even, you may take some off the table. Enough people do that. That creates supply on the market, and that's how it becomes resistance. So 29 is the area above to definitely watch into next week if we do move up. Now, the weekly chart, pretty strong setup here. We've got a little bit of a bullish pennant here. We've got the pole, we've got this pennant. So if we do break out, that could kind of lead us into the next leg up on the weekly chart. Going into the next one, GME, GameStop, have not really gone over this one too much on these shows. So I'm excited to kind of look at this one. This is one that actually traded last week. You can see here that we did have this falling wedge breakout. The problem was we didn't continue up after getting to around 195. So that was one where you just had to look at the price action and say, okay, this thing's not ready yet. We'll have to take the profit and move on. Now, on the weekly side of things, this was also kind of a thesis of why I got in. If you look at the weekly chart, we had 6 red weeks in a row. And you can see that, you know, these were pretty, for the most part, it was kind of like stair stepping down. It was a very gradual, just very even and gradual move to the downside. Then you finally kind of got your capitulation candle the previous week to last week. But you'll see here that we had the volume shelf. I'm just anchoring the VWAP, the volume by price from the all-time high candle here in January of 2021. We bounced off the volume shelf for now. We'll have to see if we actually continue up. If we did continue up, if we anchor the volume by price on the daily from the swing high, you'll see there's quite a bit of supply above, which starts right around 210 to 217. If we did somehow get through all of the supply, that anchored VWAP is above right around 229 or so. You'll see that it is still declining. So over time, this will continue to decline until price kind of gets closer to it. And then the VWAP will kind of flatten out. But for now, it is still declining as the price is still pretty much below that area. And that's why it's declining. So all in all, we'll have to see what happens. The meme stocks kind of still baffle me. A meme stock is definitely something that I have no interest in really holding on for more than a short-term swing trade. And if the trade, you know, goes against you, you definitely got to recognize that with these meme stocks because they can move very quickly to the opposite direction. Another meme stock here is AMC. So you can see here, AMC, you know, we've been looking at this gap now. The gap finally filled a week and a half ago, and you can see that we're now trading kind of right at this gap area. As always, this gap highlighted as just using the gap snake on TrendSpider. It really comes in handy when you're not able to quickly glance and see, is that a gap? Is that not a gap? I can't even tell. That's when you just turn on the gap snake and it will show these areas for you. So right now, just trading pretty much right at that gap level after a pretty strong move up to almost $47. And then we moved down all the way to the 34s again. So some crazy price action there. If you do look at the weekly chart, you'll see that we have quite a wick here. So this is when you always want to turn on the raindrop to see what was going on within this wick. And in this case, not a ton that we can see here. We do have a blue raindrop or purple raindrop, whatever color that is to you. Generally, this can signal kind of reversals in the trend. So we have moved down from 70 all the way down to around 31. So is this possibly signaling a reversal maybe to the upside again? We'll have to see how that plays out. No point in trying to guess or predict. We have to let price action lead the way. So that is AMC. Going to be interesting to see if we do break down. If we did break down, naturally, the next area below would be this longer term trend line support. And remember, this is a function of time. If we move straight down to it next week, we'd be around 25. If we traded around for, let's say, the next 4 weeks, we would be pretty much trading right at this same level and we'd still be on the support line. So it's really about how quickly price moves down or how long it stays in the same area when you are looking at these trend lines that are a function of time. And when I mean function of time, it means that this is increasing as time goes on. So if this takes another 3 weeks, your $25 support blow turns into 32. So that's what I mean by a function of time. The last one that we're going to go over is Roku. Roku had an absolutely huge move to the upside on Friday. We did have a nice flag breakout here. Barely missed the all-time highs above. This is when an alert around that area would have been nice. You just add your sensitivity. You would have been alerted if you weren't in front of the screen and didn't know what was going on. You would have been alerted knowing, whoa, Roku's getting close to all-time highs because I have my sensitivity alert. You get your text message, you turn on the computer and do your thing. On the weekly side of things, you can kind of still see that this flag is a little more defined here. You can see that they're both pretty defined. It's the same flag, obviously, it's just in a different time frame. Very strong move to the upside, quite a bit of volume supporting price above this resistance. And if we do continue up, I mean, sometimes you just got to zoom out and see, okay, well, if we make this really small, these little blips in price really are nothing. I mean, this thing has had some really big moves to the upside and the downside. So these little moves, really don't mean a lot long, but as we hit higher highs, that's what really matters to keep the trend. Higher highs, higher lows, trend is still intact, and that's exactly what's happening here. So all in all, quite a week in the market. Just some of these names had absolute huge explosions. Some other names didn't have any type of price action. It was kind of a very odd week how that worked out. But all in all, make sure to also check out the software update that we came out with, the smart checklists, especially if you're a time frame trader where you're looking for full time frame continuity. A lot of people who trade the strat are definitely using this. So it allows you to see, let's say that you've got 5 conditions. The smart checklist will tell you, okay, 2 of these conditions have been met, 3 of them still have yet to be met. And that's really especially true if you're wanting to see the 15-minute, the 30-minute, the hourly, the daily, and the weekly. You can say, okay, the weekly and the daily are green, but the other 3 are red. I still need 3 time frames to go green until, let's say, I get in the trade. So definitely check that out. The smart checklist is something that you definitely want to add to your arsenal. We have videos on it. Dan made a great video that we have posted on our Twitter account. So if you have any other questions, reach out to hello@trendspider.com. As always, we'll be happy to answer your question there. And that is all I have for the chart request. Remember, if you do enjoy these episodes and these different segments going over the broad markets, the chart requests, all of that, make sure to like and subscribe, and we'll see you next week.